Okay.
Right, so why do we do a cash flow statement?
Cash flows to see if there's an inflow of cash or outflow of cash within the company.
Correct. And where does that arise from?
Tier accounts.
No, we're just talking generally now before we go into the details. So cash flow can obviously arise from different transactions. Do you agree?
Yeah, you get indirect and direct.
Yeah, so what's the difference between cash flow? Well, there's 3 different sections that we're going to be considering. Right, the operating, the financing, and the investing.
Yeah.
Those are the 3 different sections that you're looking at when dealing with cash flow. Because when dealing with bank or cash is either going to be used for operating, investing, or financing purposes. And that needs to be communicated to the users in the statement. So the cash flow statement is just a breakdown of where money's coming in and where money's going out. That's all it is. And then you've obviously got to draw up the different sections as required by the question. So if I'm looking at operating, what's the focus there? How do you remember what goes under that section?
Operating is the day-to-day activities of the company.
Exactly. So anything day-to-day or anything short-term, that would be part of operating. Investing, how do you remember what goes under there?
Investing is the assets and liabilities of the company.
Not assets and liabilities.
Just assets.
Just the assets. Where do the liabilities go? It's financing.
So under financing.
Okay, so investing looks at your long-term assets. Things that you've bought or sold that's going to affect your capacity. Okay, so property, plant, and equipment.
Yeah.
Financing, how do we raise capital? Debt or equity?
Yeah.
Okay, so with financing, you're looking at loans or equity, so capital contributions. Those are the things that you're looking at. Okay, does that make sense?
Yes, it does.
Okay, so as long as you're comfortable with that, then you should be able to draw up the different sections. All we need to remember is format.
So what really just stresses us out, I think, is all those different tier counts.
Yes.
That's what.
Yeah, so the way you approach the tier counts is by looking at the additional information. Okay, so just to recap with direct, I just need 2 line items, receipts and payments, and that gives me the cash generated from operations. Only the top bit changes in terms of layout and format.
Yeah.
The rest here stays the same for the direct and the indirect. Right, only cash generated from operations is calculated differently if you've got this, indirect. Because now you need to adjust for all of these things. Non-cash items, increase or decrease in current assets and current liabilities. Any adjustment that's going to affect your profit for the year or your profit before tax is going to be taken into consideration. So for an indirect question, I do need to consider those non-cash items.
Yeah.
Afterwards, you'll have all of those same accounts. You won't always have those accounts. It depends on the question. Okay, so don't try write out a blank template for this, because you're gonna have lots and lots of these different line items. Some of them you might not even have, and then it might confuse you because now you're trying to look for an amount that isn't there because it's not provided for in the actual question. Right, and that's why when we approach the cash flow, how do we know what tier accounts to draw up? We need to look at the actual additional information. Right, there's going to be clues there that tell you what are you going to have to be doing in terms of a working.
Yes.
Okay, so that's direct and indirect. Investing is easy because it's just one heading and one total. It's just movements in assets, okay, long term, inflows or outflows. Then you've got financing, which we spoke about, debt or equity. So if they contribute in the form of capital, it'll affect the financing. If they raise loans, okay, to raise capital, it'll be seen as financing. Again, simple disclosure, it's just headings. And then you need to decide what does the actual transaction involve? Okay, operating, financing, or investing, and that actually comes from the question. Okay, so no two cash flow questions will be identical, right? Because they could be asking you for different sections, right? And there could be different workings or adjustments. Does that make sense?
Yeah.
Okay.
Yes.
So let's close the notes. Okay, we've recapped that. Those are the three most important slides to look at. Okay, so we said we'll start with October, November 2015 as a cash flow revision question. 2015 cash flow revision question. Okay, and let's start with the required. Okay, so when doing a cash flow question, remember the additional information is actually more important. Why?
This is like I can just scan copy it.
Okay, sorry.
Why is the additional information actually more important in a cash flow question?
It tells you exactly what you have to do first. So it tells you if you need to do the indirect, direct, if it's operating, financing, or investing.
Okay, yes, because remember, if you've got a list of balances, it's simple to run through the balances and just look at operating, financing, or investing if there aren't any adjustments to consider. The problem comes in with adjustments, okay, because then we have to provide for those movements.
Yeah.
Okay, so what method are we using here?
The direct.
The
Yes,
direct.
so if you're using the direct method, what are you going to be focusing on? Well, two line items, receipts and payments, and that's it. Does that make sense?
Yes, only cash things. We're not going to focus on non-cash items.
You're not going to focus on non-cash items, correct? Because that's not important from a
Direct point of view.
direct point of view, exactly. Because direct is focusing on those T accounts. Okay, because I'm looking for what? Bank.
Yeah.
Okay, so when looking at the cash flow for this particular question, because this is direct, we're going to write a heading. Okay, so question 3, statement of cash flow for the year ended. Then you've got the operating activities section. Okay, remember, I'm going to split it into cash received from customers, and then I'll skip lines and I'll put cash paid to suppliers and employees. Okay, and after having done a working for those two line items, I'm going to get a total. The total is going to represent the cash generated from operations. Make sense so far?
Yes, we just write it in.
Okay. Alright, so you're going to have adjustments and you're going to have totals. Then you're going to leave space because there could be cash flow items there that'll be operating in nature. And then you're going to have your total for the entire section, which is the net operating cash flow from operating activities. Okay, so there's a big total for the final amount. Okay, whatever the amount is, we'll see when we actually do the working. Make sense?
Yeah.
Yes.
Okay, so now what do? We go to the question, because now you've built your solution, because you know you're only doing one section. I don't have to worry about the other sections because they're not important for this question. Don't do more than you're required in the exam, because if you do, you're going to run out of time and you're going to be doing things that aren't going to be giving you any marks.
Yeah.
And that's a problem. Okay, so focus your attention on operating, and that's it. What's the focus here? Day-to-day running of the business. No
Yes.
assets, no debt or equity. Make sense?
Yes, it does make sense.
Okay, so now we go to the question. Where do we start?
We start at the disclosure. Well, the required.
The additional information.
Yeah.
Okay, we've looked at the required. Alright, so after looking at the required, which was that, okay, then we go here and we look at line number 1. All purchases and sales are made on credit. Is that important?
No,
No.
Yes, it is.
but it's credit.
Yes, but we're thinking about how bank could be affected. Remember, the question we always ask ourselves is, can I find bank from this particular adjustment? Well, can I?
Yes.
Where will you see it?
Well, bank you'll see on the credit side
Of which account?
of debtors
Yes. And?
and operating.
No. Okay, so you've got the one account, debtors. Okay, but you don't have the other account. So you just told me that you can see debtors, okay, as being part of that working. Do you agree?
Yes.
Okay, so you told me that I'm going to see bank on which side of debtors?
Bank you're going to see on the credit side.
Exactly. Right, because you know everything was made, okay, on credit. So they bought and they sold. Everything was a credit transaction in this particular question. That's what they said.
Yeah.
Right, so what does that mean? Well, that means our sales are going to be increasing our debtors. Right, you know debtors is an asset, so there's going to be a balance here, and there'll be a balance brought down, balance carried down. Does that make sense?
Yeah.
Yes.
Okay, so that's the scenario that we've got currently after having read point number 1. Point number 1 is telling you to draw up which accounts? The debtors and the creditors. Got that?
Yes.
Okay, so see, that's how I know which accounts to draw up. So your question was, how do I know which T accounts to draw up? Well, it depends on the question. Point number 1 told me that everything's made on credit, so I need to think about bank. Can bank arise there? The answer is yes. Where will bank arise? In debtors and creditors.
Okay. So it's balance and sales.
They said it was all on credit, so you're going to have inventory here, right?
Yes.
And what are you looking for? The bank. Whatever the bank amount comes out to. Balancing figure.
So credit is...
Got that?
Yes. We just write it in bank.
Okay, so now I'm not going to do it. You're going to do it. Okay, you guys probably haven't done this question yet. So try it now, just for these two workings. Finish the debtors and finish the creditors T accounts.
Okay.
Would you be able to recreate those T accounts in the exam? Well, we need to see. Okay, you need to complete them, you need to find the bank, use the information in the question in terms of the balances, because now you've read the adjustments.
29.
Alright, try that and then we'll check just now.
Minus 123 and 189 is 55.
Are you guys managing?
1,611. And then at the top there you put 17.
How are you guys doing?
We good, I think.
Okay. Have you finished the debtors yet?
We're busy with creditors and debtors at the
You're busy
moment.
with both. Okay, you're doing both. Okay, that's fine. Keep going.
Okay. Now the sales.
Alright, so let's check what you've done. Okay, in debtors, what was the balance?
Well, on the balance it was 298,000.
Great,
Yeah.
that came straight out of the question. Okay, notice you need to put in opening and closing balances here if you want to balance off the accounts.
Yes, we did that.
Okay, what was your sales figure?
122,400.
Sales figure?
Yeah, we got 122,400.
462,000.
Oh,
Where
it's
did-
the revenue.
It's the revenue, yes.
Oh gosh.
Isn't
Can we
revenue sales?
But
Yeah.
isn't okay? Sorry.
What did you guys use?
We use the cost of sales.
Okay, no, cost of sales is cost of sales. That's different.
Okay, sorry, I need to. Okay.
Okay,
So-
revenue is sales. Just another word for sales.
Okay.
Okay,
Well, now-
so Sales 462,600.
Yeah.
Can I balance this account? Yes, that's the easy one to balance. Sum up the left.
It's 760,600.
Yes, and then the balancing figure is the difference between what we just had as a total less the balance carried down. And there you go, 440,600.
Okay. 440. We did the right for what we had to do. We did it right. We just used the wrong sales amount.
Yes, I know. I realized that because you used the cost of sales. Yes. Okay,
Yeah,
but obviously
but
your working would have been fine, but just the amount would have been wrong. Okay, so you would have lost a mark here, and then they would have allocated maybe a half just for your balancing.
Okay, but at least we know what we're doing. But
Just be careful. You need to find the right figures.
Yeah.
Okay. Creditors, what did you get there? What is your final bank figure for creditors?
Okay, I don't know how correct this is now, seeing as we did that. 123,189.
Ooh, not quite. Okay. Creditors needs a balance. So did you have the opening and the closing?
The opening balance, we got 86,800. The closing balance was 103,200.
Fine, so nothing went wrong there. Okay,
Nothing.
the question is this. Inventory, where does that come from?
Well, we got the inventory here. It states the inventory. The opening amount was 94,700, and then the closing amount was 82,300.
Okay, so what must you do?
Then we saw the additional information. The cash paid to the trade creditors in respect of purchases of trading inventory during the 2015 financial year amounted to 92,800.
Okay, you needed to balance this account off.
Okay. So we had to do inventory.
So inventory is going to have an opening and a closing balance. Because where does this come from? It comes from the contra account. So every debit has a credit. If you're referencing inventory in creditors, then you'd be referencing creditors in inventory, right?
Yeah.
So that's the figure that you had to work out first. In order to get creditors, I'm going to have to put the opening balances and the closing balances and the cost of sales that was given. So given here, opening given, closing given. Solve. Alright, so that's what you need to work out first.
Okay.
It's this. The amount that you've actually bought.
So the cost
Okay,
of
because
sales.
remember, what was I trying to find here? The bank. What did they say in the question? All inventory was purchased on credit. Did they tell you what the amount was?
It said amounted to.
No, they didn't tell you what the amount was.
It said 92,800.
Did they?
Yeah,
Where
it
do you see
says.
that? Oh, okay, it's even given here.
Yeah.
Okay, so then you didn't even have to do all of that because they gave that to you here. Then it was even easier then.
Yeah.
No, hold on a sec.
It says there because you need
yes, yeah, it does say there, 92,800. Okay, so all you have to do is literally just write that in. You don't even have to do the working I did.
Yeah.
Because have a look at this. Inventory is that then, okay? So then the total here is this plus that. Do you agree? And then if I take this minus that, what do I get? Oh, I get the answer that was in the question.
Yeah.
Yeah.
Okay, so they actually gave you this figure already. So this actually wasn't necessary. But it would be in other questions. In this one, it wasn't. So this was actually an easy cash flow.
Yeah, so it was 9,800.
Okay, so see, this is how you get the 9,800. Because normally they don't give you the answer in the question.
Yeah.
So if they didn't, then you would do it how I did it. T account, creditors, inventory, find, bank.
Yeah.
Makes sense?
Yeah.
Okay. Where's that figure going to go? Or where are those figures going to go? There's two.
Well, you're going to have to put it in cash paid and cash received.
Yes. So the one that we worked out for debtors goes there, and the one we worked out for creditors goes here.
So don't we have to state that it's debtors and creditors?
You can.
Okay, so I'm just going to write their debtors in the amount.
Well, just asterisk it, yeah. I would do it like this. Maybe do it as a bracket and then just write down what it is underneath. Or say C working. Right, but obviously you'll have a heading here for working, so then if you do make a mistake, they should look at your workings.
Okay, and then cash paid. So
Got that?
yes.
Okay. What's next? What does the next point say?
Equipment with a cost price of 12,000 purchased for cash on the 28th of February 2014 could not be put into operation because of the technical fault and was consequently. Yes, sorry. Consequently returned to the supplier. The supplier was unable to provide a replacement or to repair the equipment. A full cash refund was made by the supplier to the Super Bowl CC on the 2nd of March 2014.
So now what are you thinking about?
Well, the thing is, equipment was bought, so I don't know if you're going to have to do a timeline for this.
Okay,
because
you're missing step number 1.
Because, well, the thing is, okay, equipment with a cost price of 12,000 purchased on the 28th of February 2014. They bought a new piece of equipment, but the issue is that they couldn't use it because there's a technical fault, and they got a 100% refund.
Yeah, I know what the question says. You just read it as well. Now you've read it again, but you're missing something.
Oh, it's day-to-day operating activities. So, is that just extra information?
Well, what section would you record this under?
Financing.
No, not financing.
Investing.
Why?
Oh, PPE, property, plant and equipment.
That's it. Okay, so now you know why we're not going to look at this.
Yeah.
Because what is this focusing on?
Operating.
Equipment. And equipment is investing, not operating. What did the examiner want me to focus on?
Operating.
Operating. So don't waste your time drawing up timelines, calculating amounts, doing all sorts of workings, and you're going to do that for nothing.
Yeah, it would have been for nothing.
Okay, because you're not focusing on what the question is asking for. Okay.
Yeah.
Only focus on operating. Equipment is which section?
Equipment is investing. It's PPE, property, plant and equipment.
Exactly. Okay, so I'm not going to look at that for this question because it's not necessary.
Yeah.
Okay, so now what do? You've looked at everything here. You can tick all of it. Now you just go back and now you get your easy marks. Okay,
yes.
So now you literally go line by line by line by line. You ask yourself two things. Number one, is this going to affect the operating section of the cash flow?
Okay.
And
Let's
number
start.
two, okay,
Yeah.
will this account have the bank or will a different account have bank? That's all. Okay, and if the answer is yes for both questions, then we need to do the workings and we need to do all the T accounts that affect it.
Okay, yes.
Okay, so go down the list. Tell me what you're thinking about each line item.
Okay, land and buildings is PPE, property, plant and equipment, so that is not needed.
Why? Where does it go?
Because it goes to investing.
Exactly. Would this have been an inflow and outflow?
Inflow.
No.
Outflow, because you're paying for it, so it's outflow of cash.
Okay, land and buildings went up. So if you had to draw up investing, you would have a negative there for 20,000.
Yeah.
Next.
Equipment, it's not needed, it's for investing.
Fine. Increase or decrease, inflow, outflow.
Inflow.
Yes, why?
Because you're going to get inflow of capital out of the equipment that's producing your products.
No, that's operating in terms of the production. Equipment was bought or sold here.
Sold.
Exactly. And that's why it's an inflow. If you sell something, you're going to get something.
Capital, yeah.
Okay, next.
Accumulated depreciation. No, you don't need it.
Why not?
Because it's a direct method.
Exactly. It's direct. Don't need it. Next.
Members' contribution. I think it's a possibility we do need that because it could be an operation.
Okay, what's the answer to question number 1? Which section does this fall under?
Operating.
No. Members' contribution. What is it?
Oh, that's capital. It's owner's equity.
So
it's financing. Don't need it.
Exactly. Okay, so do you see how important it is to know what these accounts are? Even for a cash flow question, those basics still apply. Those basics, the assets, owner's equity, liabilities. Okay, knowing those accounts, those elements, eh?
Okay, then the next one's retained earnings.
You don't need that.
Okay, what is retained earnings?
Retained earnings is how much the partners or the members are entitled to.
No, not how much they're entitled to. Retained earnings is how much they've kept within the business.
Yeah,
because the business makes a profit, and if not all of it is paid out, then some of it will be kept in the business.
Yeah.
So if some of it is kept in the business, it's retained, and it's now owner's equity. Is there going to be bank there?
Owner's equity, there will be bank.
Retained earnings.
No, there won't be because it's financing. So it won't be.
No, it wouldn't be financing because retained earnings relates to what? We just spoke about it. Profit.
Okay.
Okay, see, this is the thought process. So now you're thinking about this one line item. Your thought needs to go along the lines of operating, financing, or investing. Okay, so you know retained earnings comes from the profit of the business. Is that operating?
Yes.
Yes, but where are we going to see? Where are we going to see the actual payment? Will you see the bank in retained earnings?
Yes.
No, you won't. Retained earnings just shows how much you keep and how much you distribute.
So won't it be under owner's equity?
No, it won't be. Well, it is under. It is owner's equity. Retained earnings is part of it. Okay, but the focus is bank. Are we going to see cash flow here? Yes or no? The answer is no. We won't see it in retained earnings, but retained earnings is going to affect our distribution.
Okay.
Okay, will you see bank in the distribution?
No. Yes, you will.
Well, at some point in time, you need to pay out the distribution, right?
Yes, and it'll be on the debit side of distribution to members.
Exactly. There you go. Now you've got it. Okay, so now I want you to draw up these two-tier accounts. Okay, see, that's the thought process to get to the working. Now you know you're going to have to draw up this account. Okay, so now this is what you guys are struggling with. You're not too sure when to draw up what account. So that's what I'm doing. That's the thought process. Now I know I need to draw up this account. And what other account?
The distribution to members.
Yes. Okay, there you go. Those are the two that I want you to draw up. Quickly, see if you get it. Right, make sure you do. Debits and credits, what are we looking for? You just said earlier, bank is going to be where?
On the debit side.
Of
distribution to members.
Correct, that's it. Got everything. Now you just need to complete. Try recreate those 2T accounts.
Okay.
In retained earnings, do we need to put the profit for the year?
Well, let's think about it. Would the profit for the year affect retained earnings?
Yes, it would.
How would it affect it?
It would well, depending on whether it's positive or negative, but it would increase the retained earnings.
Yeah, so were you given a profit or a loss in the question?
Income tax expense. Yes, profit before tax. Yes, you were.
Okay, so obviously you've got balances, right? So I'm hoping that was pretty easy to do, right?
Yeah.
get the opening and closing balances.
Yeah, we've got those.
Okay, and then what are you going to put in next?
You would put in your profit for the year
Where?
on the credit side of retained earnings.
Okay, what is your profit for the year?
68,244.
Is
Would
that
you
the profit for the year?
No, wouldn't you minus the income tax expense?
as well, yeah.
Yes, that's better.
So it's going to be 68244 minus 19,791. So it is 48,453.
Okay, yeah, so far so good.
Okay.
Now
Okay,
what?
we just write that in. We just write that in.
I think we can balance it.
No, you can't, not yet.
We have to
Well,
do
we
the
need
distribution to
yeah.
members side first.
Well, you need to check what other line items in the actual question would affect the retained earnings. So look at the question.
Would you put the distribution members payable?
Yes, you would. Okay, what is it?
It's
Well, the opening amount was 1,400, but the closing amount was 4,400.
Okay, that's fine. If you want to look at the balances, fine, we can do the balances first. That's okay.
Okay, it's just probably easier for us. So it's 1,400.
Okay, because you're trying to build up this account, which is fine. You're still going to get to the same answer. Okay, that's fine. You've got more to work with. That's good. Keep going. What else? Look at the question. It's there. It's somewhere here.
Won't the SARS income tax have something to do with it?
No, SARS income tax will only affect the profit. That's all, which you've looked at.
Bank.
Bank won't affect this. Bank is cash. Bank is separate.
Okay, so creditors control, trade creditors, notes retained earnings.
What can you do with your profits?
You can purchase things.
No, what can you do with the profit?
distributed.
Distributed or retain it or
Invest.
Transfer
it. Okay, to a reserve. Okay, so are those two line items going to affect the retained earnings?
Yes, they are.
How?
They're going to decrease it.
So where are you going to put that?
On the credit side.
On the credit side.
Wait, the profit on the debit side.
Why the debit?
Because it's decreasing.
Decreasing what?
The profit for the year.
The retained earnings or the profit for the year. Yes, there you go.
Yay.
Okay, so now you know that this is going to be affected because you had that line item over there.
So that is 3, 4, 1.
Can you now complete the question? Yes. All you do now is sum up. What do we get? 19,000. What is the 19,000 representing?
Won't that be the profit?
The cash paid.
Okay.
Okay, so cash generated from operations minus 19,000. And that's it. Make sense?
Yes, that's distribution.
Operation. Okay.
So it's 19,000. Okay.
Go back to the question, keep going down the list. What's next? After that,
Okay, asset replacement reserve, which we looked at. Okay, inventory we looked at. Debtors control we looked at. Allowance for credit losses.
I don't think you'll need.
why not?
Okay, wait, you will. Because that's cash.
Is it cash?
No, credit losses. No, it's not. It's an indirect method.
Yes, I don't need it.
No, you don't.
Yes, you
Bank
don't.
looked at.
Okay, you
Long-
don't need it because it's a non-cash item.
Yeah.
Same as asset replacement reserve, it's a non-cash item.
Yes.
What else? Keep going. Bank?
Term loan, bank we've looked at.
Well, bank you don't look at because they didn't ask you for the movement in cash, net flow. Net
Yeah.
inflow, outflow.
Long-term loan you don't need
Why?
because that is financing.
Yes.
And
Inflow,
we know-
outflow.
Inflow.
Which one?
Inflow.
Why?
Because it's money going in.
The loan went up.
Yeah.
Yeah.
So if the loan goes up, you receive more cash.
Yeah.
Yeah.
But
Okay.
you don't need it for financing. Creditors control we looked at.
Yes?
Accrued expense, rent, we don't need.
Why
no, it's
not?
operating. No, we do need it. It's operating. It's rent.
Okay, it's rent. Yes, see, that's the key.
Need it.
Okay, so where are you going to see bank here? In the rent accounts.
Yes.
Okay, so do the T accounts. Find it. Find bank.
Accrued rent.
Rent expense.
The balances are going to be on the debit side.
Balances for accrued rent expense.
Yeah.
Think about it. What is it?
It's money owing.
So,
So therefore it's on the credit side, but for the rent expense it's on the debit side.
well, there is no balance in rent expense. Remember, rent expense is an account that's closed off to where?
Bank.
Profit and loss. So I need to plug in the power. Okay, there we go. Yeah, keep going. So you were telling me that accrued rent expense was a liability,
Yes.
and you told me rent expense is an expense, right?
Yes.
Yeah.
Okay, so you said accrued expense is going to have a balance on which side?
It's going to now be on the credit side because it's liability.
Yes. Okay, and then rent expense is what we were discussing. Where does rent expense get closed off to?
Profit and loss.
Profit and
Profit and
loss.
loss. So there won't be an opening and closing balance for rent expense because it's always closed off.
Okay.
Do you agree?
Yes.
Okay, so first balance the accrued expense.
Okay.
What's the balancing figure going to be? Debit or credit? And which side?
Well, it's 2,800.
So,
It's going to be on the credit side.
yes. Okay, where is that going to go? To the rent expense.
Yeah.
And now, we need to wrap up the rent expense. You're looking for bank in rent expense. Where would you expect to see it?
On the rent expense is a expense on the debit side.
Okay, you would expect to see bank here, right?
Yeah. Yes.
Okay, so you need to recreate the account. So, how much did you have as a rent expense for the year?
Accrued expense rent. It says the opening amount was 86,000 and the closing amount was 103,200.
Okay, we're looking at rent expense.
Yeah, that was it. No. Oh, sorry. 14,560.
Yes. 14,560 is what? The rent for the year.
Yeah.
So where would you have closed it off to? Profit and loss. There's the bank.
Yeah. But I'm confused. Why did you Okay, never mind. I understand.
Okay, remember you close off profit and loss, okay, to work out the gross or net profit. Okay, net profit actually. Okay, so
Yeah.
rent expense is one expense that would have been closed off to rent expense in the
Yeah.
profit and loss.
Yeah.
Got that?
Yes.
Yeah.
Okay, so where are we going to put this 11,760?
We're gonna put it.
In our cash paid to suppliers and employees.
Yes.
Plus 1760.
Got that?
No, it's rent, and then it's 11760.
Okay.
Got that?
Now what?
We go back to our down the list. It's prepaid expense for water and electricity.
Prepaid expense for water and electricity, yeah?
Uh,
We're gonna have to use it because it's operating.
Yes, you do. Good. So, same thing again. Draw up the T accounts.
These tier accounts are the things that we hate.
Okay, well, it takes some practice, so hopefully with a bit more practice it gets a bit better. I mean, you're not doing so badly now,
Yeah.
so
I
just
just
keep going. It will get better.
It's just very time consuming.
Yeah, it is, because you're still unfamiliar with what's happening. That's the thing. So what I would suggest you do, maybe take this week as revision week to get the cash flow right. Maybe
Yeah.
after today, just do all the cash flow questions in all the past papers that you've got and just see how is it going. Would you be able to pass a cash flow question? That's all you need to try to do, is do enough to pass and then focus on trying to do better. Okay, so what we've done here in terms of workings should be enough for us to pass. Even though you don't get the final answer right here, hopefully you'll still get a half there, a half there, a half there. Okay, a few halves here and there allow you to pass.
Yeah.
Okay, obviously, ideally you want to get the right answer, but if not, at least your workings should still carry marks.
Yeah.
Okay, keep going.
Okay.
Complete the T for prepaid.
So it's going to be prepaid expense. So
Yeah, do it and then see what you get.
So prepaid expense, and then it's just going to be what electricity going. E. So prepaid expense is expense. So there will be balances though.
There will be, of course, for prepaid expense.
Yeah. Just so prepaid expense is a liability.
Ooh.
No, it's an asset.
Why?
Sorry. Because it's it's a resource.
Exactly.
That
If you've prepaid something, you've got something.
and you got something out of it. So then the balances are going to be on the debit side.
There we go. Okay, now finish it.
Okay. Balance. But we also need to use bank for this. We would have to use bank for this.
Well, you're searching for bank. Did you balance the prepaid? Debit or credit balancing figure for prepaid? Debit or credit balance for prepaid, guys?
Prepaid, you're going to have to debit.
But what did you get as the final answer? You don't use bank because you're searching for bank.
Okay. Well, the thing is, the opening balance was 1,300. The closing balance was 3,700.
So, where's the balancing figure?
On the
Credit side.
Credit side.
On the debit side.
Which side?
Debit.
Yes.
Yes.
So, didn't you get that?
We just want to know, where did you get the 2,400 from?
From here,
The difference. Because I'm balancing the accounts.
Oh, sorry, that was a blood moment. Yes, it's going to be the 3,700 minus the 1,300 in
Yes,
order
because that's the balancing figure. Where is that going to go? Into water and electricity.
Yes, it's going to go into water and electricity.
Which side?
It's going to be on the credit side.
Yes. How much did you transfer to profit and loss?
2,400.
No, to profit and loss. What is the actual water and electricity expense for the year?
It was 9,400
That's it. Where would you show that in that tier account?
on the credit side.
Yes, because it's closed off to profit and loss. There you go.
Yes.
Now you've got that, and you've got that. How much did you actually pay? How much?
11,800.
Yes. Is that okay?
Yes, because you added the 9,400 plus the 2,400.
Yes,
Okay,
I'm balancing the T account.
Yeah, that makes sense. So
Where's that going to go?
It's going to be cash paid to suppliers and employees.
Yes.
11,800.
Okay, next.
So it's water and electricity. 11,800.
Okay, then it's bank overdraft, which we wouldn't need, 'cause I'm guessing it's financing.
Ooh, bank overdraft isn't financing, it isn't investing, it isn't operating. Bank is part of the net movement in cash flow, remember?
Yeah.
Okay, opening and closing balance. If you're using the templates, you've got that section at the bottom.
We're not using the templates.
Okay, that's fine. If you're not, that's also okay. But I'm just saying that it's at the bottom.
Yeah.
Okay, it's the net movement thing, right?
Yes.
Okay, what else?
Accrued interest
expense.
expense we need.
Do we?
Interest expense is how much you have to pay, and
Yes.
it will be under finance. Investing.
No, interest expense is part of operating because it's a separate line item between your cash generated from operations subtotal and your final total, net cash from operating activities, right?
Yes.
Are you going to need to draw up the T?
Yes.
Yes, so draw it up. We're trying to find, obviously, the interest paid, which would have been that line item. Do you agree?
Yes.
Okay, so let's see if you get the right line item by recreating those T accounts. Try that.
So it's going to be.
So your balance is going to be on the credit side. So it's liability.
accrued interest expense and interest expense.
Okay, have you guys done it yet?
We're just busy.
Okay.
Okay. So, accrued interest expense, it's going to be on the balance is going to be on the credit side. So it's balance. Okay, accrued interest expense. So it is, the closing amount is 1,249. Then that's going to be 0. 1,249. Okay. So it's just going to be 1,249. Okay. Then the rent expense, you're going to have to put the accrued interest expense on the debit side. Then you're going to have to put the bank, because bank also is there. And then profit and loss. Okay. So the accrued interest. So that is 1,249. So the interest on the long-term loan is 4,996. So when's the bank be 4,996? So okay, so with the accrued interest expense, the balance is going to be on the credit side.
Yes.
So the opening balance is 0.
Yeah.
The closing balance is 1,249.
Yeah.
And then the balance on the debit side is going to be 1,249. Yes, like that. Okay.
And
then on the interest expense, accrued interest expense is going to be 1,249.
Which side?
On the debit side.
Yes, and then?
Then I'm confused with the rest. Is it supposed to be?
How much?
It's 4,996.
There we go.
Okay, yay. Then you're going to have to add the two together, and that's bank.
What? Add the two? Subtract.
I mean minus.
Yeah, to find the difference.
249. The answer. Oh, jeez.
The answer goes where?
The answer will go on the debit side, and it's 3,747.
Yeah, and it'll be referenced here. Interest paid on the long-term loan. Happy.
Very.
Good. Right, so there's one more to do. Well, actually two, but we'll see just now. What's the next line item after that interest?
I'm just writing 37.
Okay.
Sorry, 3,747. Okay. Then, after the accrued interest expenses, SARS, the income tax.
Do I need it?
No.
You need to think about bank.
Yes, you do need it because it affects the profit and loss.
No.
Okay.
Do you pay
SARS?
SARS?
Yes, you pay SARS, therefore
you need to draw up the T accounts.
Yes, you will.
Okay, so draw up the T accounts, search and find bank.
Okay.
The last two T accounts that you need to draw up.
It's an expense.
SARS.
Expenses. Yeah.
SARS income tax isn't an expense. The income tax on its own is the expense.
Okay.
SARS income tax is what?
An income.
No.
An asset.
No.
I'm so confused. A liability. It's a liability because you're obligated to pay it.
Exactly. That's
So
the
it will-
right answer. So
Yes,
if
so-
SARS income tax is a liability, what are you going to have? Debit or credit?
It's going to be credit on the credit side.
Yes. Okay, now just finish it.
Okay. So
Find bank. Bank will be where?
bank will be on the debit side.
Good.
So this was balance. The opening was 46. Closing was 587. So then the bank is going to be 427.
The bank isn't going to be 427. No. How much
Yeah.
tax arose during the year?
Income tax expense 19,791.
Are we going to have to pay that?
Yes,
So where does that go?
on the credit side,
Of which account?
on the income tax.
Well, of the SARS income tax, because you're
Yeah.
solving for the bank.
So it is 19,000.
Right, you don't have to draw up the T account for income tax. I did in my working just to show you how you would have closed off that account. But it's not necessary because there's no bank in that account. Bank appears in the liability because you pay off a portion of your amount outstanding. Or you pay off the full amount depending on the situation. Does that make sense?
Yes.
Yeah.
Okay, good. You guys have the T account. That's what you're looking for. Where does that go?
It's going to go by the cash generated from operation.
Yeah, it's a separate line item under
Yeah.
the
Yeah.
cash generated for operations.
Yeah.
Okay, minus 19,364. Got that.
Yes, we just had it in.
Okay,
No.
go back to the question. Do you
If
see
you don't-
anything else that needs to be recorded?
Can you quickly go back to the T account
account.
so we can just finish writing the income tax? Songs. Perfect.
Okay.
Happy.
Yeah.
Okay, go back to the question. Look for anything else that affects cash flow. Is there anything else that affects cash flow from the question?
Cost of sales, dividend income. Would it be administrative expenses?
Okay, we're going down the list, eh? Okay,
Yeah.
so we've looked at this, we've looked at this. Have we looked at dividend income?
Oh no.
So,
Dividend income would affect it.
yes it would. Good. So get your easy marks. These are ones that don't have accruals. Okay, so 1, 1, 1, 3 ones. There we go.
Yeah.
There's an easy mark. Read the next line item.
Administrative
Have
expenses.
we looked at it? No. Is there a cash flow here? Yes. Where would it go?
Um,
Payments.
Yeah.
Next.
Okay. Water and electricity we've looked at. Credit losses.
Do we need
Yeah, we do.
credit losses?
Oh no.
Why not?
Credit losses because it's not cash flow.
Exactly. There's no cash flow when you have a credit loss. You're just writing off bad debt. No one pays and no one receives. Nothing happens in terms of cash flow. Next.
Okay. Depreciation we don't need.
Why?
It's direct
Well,
method.
yes, and it's also non-cash.
Yeah.
Next.
Salaries and wages. Would that be financing or
Salaries and wages.
operating?
Yes.
Okay, so that would go under cash paid supplies and employees.
How much?
190,000.
Here we go. Next.
Okay. Then interest on long-term loan we looked at. Profit before tax, income tax we looked at. Distribution to members and transfer assets we looked at.
Good. So that's the end, hey? All you need to do now is just write in your final totals. Okay, so add and subtract all of the stuff. That's the one amount. Okay, so this total, my receipts, minus this total, my payments, gives me that answer. Okay, final answer here. Add and subtract the subtotal with the pluses and minuses gives me that. 63,229 is the final answer here for this particular question. Happy?
Yeah.
Good. And that's it.